Good afternoon, everybody. This is Chrisi from Solstice ATR and Vulcan Capital Research. Hope everybody's doing great on a Saturday afternoon. I'm going to go over some of the instruments on the overall market. This is an aggregation of the SPX, NASDAQ, Russell, and the Dow Jones Industrial Average, showing the total high and low from 2020 till May. We are above halfway underneath the 61.8 fib on the weekly chart. Unfortunately, we had a side week market. Monday, Tuesday, Wednesday was a down day. Thursday, Friday was back to an update from starting low. On Thursday, going back, to positive, and on Friday, starting low, going back to positive and closing inside the range of the Thursday close on Friday. So let's take a look at each instrument one by one so everybody can get a better understanding what I'm looking at and how we can achieve the ability to understand where the levels are. So /ES, I'll start with the S&P 500. And if we notice from high to low, we have these two minor channels. We came back from the 33.9750 down to the 21.74. We came back halfway to the Fibonacci fib. We looked underneath it. We are in that symmetrical triangle. I did this, it's showing a downtrend the week before, up move. Then on this week is an inside week, halfway through the other candle is not as bullish as the one where we started from the beginning at the low side. So we're having an inside 3-week range. Let's take a look at the NASDAQ /NQ. NQ looks way much better compared to the S&P, but this candle is undecided range week inside the prior bullish week. If you notice, it's in the upper extension. We can fall back all the way back to this side of this channel in order to continue and go back to the 18 SMA and the 50, but this has, way better look than the S&P 500, always in relationship. Look at the 18 simple moving average or the 20. Most people use a 20 and a 50 simple moving average, and everybody uses a 200 simple moving average. I use a 116 as a reference in relationship to the 18, the 50, and the 116 simple. I do not use any exponential moving averages due to the facts they are a little bit faster and slower. It depends on what time frame you're using them for, and they don't help because they are lagging indicators. Let's take a look at the RTY. RTY is a little bit more weaker compared to the prior highs. To the low of the year, we came back to the 50 Fibonacci. We fell off from the 50, coming back down all the way below the 38 to close right a little bit above the 38.2. In order for the Russell to continue higher, I'd like to see the 1300 and the 1335 to be cleared in order to continue back up and touch, the 18 simple moving average, because this is the 18, this is the 50, the 116, they all above it. The small cap is a little bit more weaker, the fear gauge on the canary in the coal mine. Let's take a look at the Dow. The Dow is in a similar situation, but a little bit on a steeper down channel with an up move. We had an inside week of the prior week. We looked underneath, came back up to close right halfway, right underneath the 50 Fibonacci. If I take the week high and low, that would be the 50% of it. And we're not at the 61.8. That's the 18 simple moving average. That's your 61, 116, and the 50 simple moving average up on the top. Let's take a look at, for example, GC. GC on the weekly, is getting around the top. It's trying to clear. If it stays above the 1754 area, look for continuation higher. But I would like to see the reset. As long as it resets and never loses the 1704 area, it should be strong enough. Let's take a look at CL. And CL, last week I had mentioned that, hey, keep an eye on this channel in the breakout. And eventually we got to the 38.10. We closed right in that area. Keep an eye on the reset between the 25, 27 to continue higher back to the 50 Fibonacci, as well as the 18 simple moving average. I would like to see a rounded bottom before continuing higher. And let's go now on the daily charts, taking a look at those instruments step by step. This is the daily chart on oil. If you notice, we are in continuation looking to the upside. I'd like to get a shoulder before continuing higher in order to get to this gap eventually, if everything goes back to normal after the COVID-19 and everybody goes back online and businesses go back to normal. Hope, we find a cure and that the biotechs can help us. Let's take a look at ALXN. That's Alexian. It's range bound, creating a head and shoulder, inverted. ABBV. I'm just going through a couple of biotechs and a couple of tech. If you notice, this is the shoulder. This is the head of it. If this is considered the cup, can we create another, rounded bottom or break above here to continue higher? Let's take a look at the Amgen. Amgen is almost at the high, similar situation in consolidation. BIIB, sideways. IBB, that's the ETF. GILD, side action. VRTX. VRTX is at the high. So at least you get an idea what the biotechs are happening in the instrument. I didn't look at Johnson & Johnson or Pfizer. You can look at Johnson & Johnson. Head and shoulder, you can see that V shape. If it creates a cup, can continue higher. Let's go to Apple. AAPL was a little bit weak due to the China, situation and the manufacturing. It fell a little bit lower. Amazon is at the high, almost in consolidation. You can see that. Facebook. Oops, sorry. FB. FB looks like, it's creating that V shape. If it creates that cup in order to continue, we don't want to lose the 205 in order to continue higher. Let's take a look at Google. Google is in that similar situation where that shoulder was, where we created that H, fell down, came back to it, halfway back through the, the Monday, Tuesday, Wednesday, Thursday, Friday action. Let's take a look at Netflix and FLX. And you can see Netflix is an annual high for the year. I always said Netflix was great from beginning of March. Hey, keep an eye on Netflix. I like Netflix. I like Netflix. Look where Netflix is, because everybody's sitting home watching TV, and on a lockup, barely get a little bit of sun and go out, do little activities and come back home. So that's Netflix. Let's take a look at Tesla. If Elon Musk can reopen his manufacturing, everybody's mad at him in California. You can see it's in the consolidation of the last 3 weeks. We looked up, came back down, we went back up, we're halfway back. In order to continue, you need the 825 higher or the 775 lower to continue lower. So this is side action on Tesla. Remember, Tesla is very hard to short. Let's take a look at AXP. Little down, less spending. Let's take a Wells Fargo, WFC. At the low, JP Morgan, similar situation. Goldman Sachs, side action. BLK, very, very well looking, clean, rounded bottom. This is the cup of it. If it can create another small shoulder here to continue higher, that would be great. It's BlackRock. Let's take a look at Sharp. PayPal are all at the high. PayPal, I think PYPL, I believe. I'm just kind of giving you a little bit of, online shopping, such as Amazon, search merchant accounts. So you can see Home Depot. You can see that the construction, people building stuff and going back online. If things go back, Lockheed Martin, LMT. Lockheed Martin. Yeah, Lockheed Martin, I believe. LMT. Yeah. Lockheed Martin, there's Lockheed Martin. Yeah, that's Lockheed Martin. It had that H pattern, came back, retraced to that breakdown, fell back down. In order for Lockheed Martin, it has to hold this area here in order to continue back up. If it falls, look for the 335, then come back up. So that's something to look into. Let's take a look at the ES. I want to break it down a little bit more in detail. Let's go from daily to 4 hour. And in this 4 hour, I want to go in this range here. We know we are consolidated. We are between the 50 and the 61 on the long time frame, but I want to go in this area only. You can see the pattern. We had looked up the week before, came back down. The week after that, we looked up and we had, this is the Monday, Tuesday, Wednesday, Thursday back up, and Friday. We came back to this range from Tuesday, Wednesday, which looked down. Thursday we gapped down and continue back up. Friday we gapped down and continue back up to close in the same range. That 28.45 area, 47 is very important, and 28.06 area. If I do lose this area, there's not much to support us. Then we got to go back to 27.80, then a little lower. This is an up channel. You can see this one here and this one here. I have one pointing down this way. We can refix them to show you what I'm looking at. Remove drawing. We're going to make a channel. And I want you to see the profile a little bit more detail. This is the low of it, correct? We connect this one to here, to here. This is a down channel. We connect this one, we clean it up because this was done on a fast time frame. Remove drawing. We connect the peak of that candle to this one here. It's in a down channel. They are pointing down. But if I connect this one up and this one down, we are in consolidation, going to be in compression until we either clear the upside to continue higher or clear to the downside and continue lower. But remember the 2800.06.05 very critical, and 2847 area, and the upside is the 65.88 to continue higher. So trade what we see, not what we think. And let's go to from style. We're going to go from candle to look at the standard. We're going to go to the monkey bars, and those monkey bars I put 5 days action to show you that the value area high is here, value area low is here, and that's the POC, and this is the most time spent. So that was the Monday action. This is the Tuesday action. We fell a little lower. Wednesday we fell lower. Thursday we fell down and came back up inside the range of Wednesday. And on Friday we fell down to come back and close in the range of that 46.42 area. That's the POC. That's going to tell us a lot of important information. If I combine this on a weekly chart going from a 30-minute bar, going the time frame is the 5 days. If I make that, oops, sorry. We're going to make it into a daily 5-day range to show you what the action is on it. Time frame. Instead of 30-minute, I'm going to go to 4-hour. Go, does it do this? I don't know if it does it. We can do daily, I think. 1 month. Weekly. And just push OK. This is a 1 month weekly. Let's see if it does something. If you notice, the range is inside. The value area high in the POC is sitting at 54.50 area. This is why I'm saying the 47 is very critical and the 65 is very critical in order to continue higher, to push us higher or fall back down. We have on the weekly bar 2 weeks in a row inside the range to break up. This is your value area high, the 29.05 area, and the value area low is sitting about 27.75 area. So it is very important that we understand if we lose the 85, we can continue lower. If we break above the 2900, we can continue higher. So we're going to trade what we see, not what we think. That's the most important thing in trading. And be sure, you know, on daily to check us out so you can get better idea what we can help you with and what we cannot help you with on a weekly basis, due to the fact on Discord we have a live streamer. You can join us for 1 week for free. Check us out and see if this is something you can do on daily basis or swing trade, or we call the trades live in that chat room. Look forward to seeing you. Take care, be safe out there, and have a wonderful